Hi, this is Stacy Young and Tracy Keffer with Keller Williams Greater Columbus. Today we have James McBain from Liberty Capital, and we are going to talk about the home buying challenges of today's market.
Right. So James, I work with a lot of buyer, and the biggest issue is credit. So let's say the buyer have low credit. Can they get pre-approval, and how low you can go to?
That's a great question. A lot of people are confused on what the minimum credit score is. They hear a big number, sometimes even as high as 740 or 720. We actually work with borrowers with as low as a 550 credit score.
Wow.
And obviously with those who have better credit scores range from 550 to 850. So there's a big score range there, and we have products to service all those types of borrowers. One of the things that we do when we look at a borrower's credit is we have a product called Score Wizard that allows us to take a look at their credit, and if they're on the lower side, we can make simple recommendations like paying down a credit card, getting it down to the sweet spot of 30% of the actual limit. That actually will help your credit scores improve. A lot of people think just paying your bills on time is what gives you good credit, but it's also the balances that you carry in regards to the limits on some of those credit cards.
Okay, and in regards to down payment, there's a myth that you have to have 20% down. Is that true?
That is absolutely not true. There are so many different low down payment options. One of my favorites is the 1% down program that we have on the conventional side. Great program for millennials that have the job, they want to buy a home, and they just haven't saved enough for down payment. The 1% down program gives them the ability to get into a conventional 30-year fixed mortgage with as little as 1% down.
Oh, wow.
And for that 1% down, is there a certain credit score and debt to income ratio? What's the...
Yes, actually, it's a great question. So your 1% down, you're typically going to have a 700 or 720 higher credit score for the lower down payments. However, if you can't get to that credit score, there's some other programs that are going to be available to you with a lower credit score, specifically the 3% down program. You can do that with as low as a 620 credit score, and then you've got the FHA program that allows you to get in with as little as 3.5% down. The conventional programs with 1 and 3% can also be done without mortgage insurance, which keeps those payments lower and helps out on the debt ratio.
That's awesome. You're talking about student because millennial student loan is a big problem nowadays that they cannot buy a home. So is there anything we can do to help?
Another great question. We've got a lot of our clients are either coming out of school or just got the job, they're 2 years in, or maybe they just got out and got the job that they've been studying. They have those student loans, and that can affect their ability to qualify. There's a couple ways. Sometimes when the loans are deferred and they're not making payments, we can prove that those are deferred for at least 12 months and we don't have to count them in the debt ratio. There's also new ways to where you can get a income-based plan if they call their provider, and as long as they can provide what the documentation, what the lowest minimum payment that they can pay, you can use that. And if they can't get any documentation, you can use as little as 1% of the balance. So that sometimes is higher than what the minimum would be. So we try to educate the borrowers to call their student loan providers, get that minimum payment documentation, which really helps. It's a lot lower than the credit report would indicate.
That's awesome.
That is great. And so right now, in today's market, the inventory is so low. What do you suggest to help buyers when it comes to bidding wars?
Well, when it comes to winning bidding wars, it's all about being prepared. And being prepared means you have a great pre-approval. And all pre-approvals are not created the same. Some companies put out a pre-approval, but they do not do the verification. What you want with a good pre-approval is that the assets have been verified, the credit has been verified, the debt to income has been verified. Think about the 4 C's. Those are what underwriters are going to be verifying when they actually underwrite the file for a clear to close or your final approval. So you're looking at credit. That is obviously the credit scores. They're looking at capacity. That is your debts in relation to your income. They're looking at the collateral. That is the house that you're buying. It has to be in good shape because that's securing the mortgage. And then finally, they're looking at cash, which is the capital and your reserves. They're looking at, do you have savings? If something were to happen, if you lost your job, do you have some extra savings?
So that's great. I didn't think that there were 4 C's of house buying, as in like 4 C's of diamond, but that's great to know.
Yeah, easy to remember too.
Yeah, very, very good. Very, very easy to stick to our mind. The last thing is because I personally work with a lot of self-employed and small business, and the challenge is sometimes people have a low year and the income a little bit low, and so if we talk about 2-year income, sometimes we average out and it's gonna be disadvantage for the buyer for their pre-approval. Do you have any special products to tailor to small business and self-employed?
Well, I'm glad you asked. We've got a lot of products for self-employed. Many of the big box institutions out there will tell you 2 years tax returns. That's what most borrowers know, and that's been kind of beating that drum. We've got some great programs that allow just 1 year your most recent filed return, which if it's a new business, maybe the first year wasn't so great, and now that second year's return is much better. You're not averaging it out. Makes for a lot better income, a lot better debt ratio. We also have bank statement programs. 2 types. You can use the business bank statements. Some self-employed borrowers haven't really separated their business and personal accounts, okay? They've got a business account. You can see the money going in. We've got a 24-month business bank statement program as well as a 12-month business bank statement program. The other good news is with investment properties, we have stated income where they will debt ratio the client off the income that the property can bring in. These are new products on the market and should be hot for 2018.
He has a lot of different products to offer for buyers, and so this is a great resource for buyers to talk to. So why you can do a lot of products that other bank cannot do?
Well, that's a great question. We're a broker, so we have access to about 50 different lenders. We constantly look for lenders that are providing new options. So we look at those lenders and we say, hey, is this going to bring us a product that the marketplace really needs? So what we do is we try to set up our contracts. We're on contracts with the lenders, and they actually pay our compensation, which is great for borrowers because they don't have a lot of fees and points that they're paying us because our investors are paying us.
Well, I guess we're gonna talk to buyer, and if anybody needs some extra help, we need to send them to James now.
Liberty Capital Services.
Thank you, James, for being here with us.
Thank you much for having me.